Fine art has always lived behind a velvet rope. Private auctions, billionaire collectors, masterpieces stored in vaults. Most people will never even see the works they're technically priced out of. But what if you could own a piece of a multi-million-dollar painting the same way you own a share of stock? That's exactly what a $50 million tokenized fine art fund has attempted to do. Real paintings, verifiable ownership, secured on-chain. Before we talk about the fund, we need to zoom out. Real-world assets, or RWAs, are physical or traditional financial assets represented digitally on a blockchain. That includes real estate, government bonds, commodities, private credit, and now fine art. Instead of buying the whole asset, you buy a token representing a fractional ownership stake. The blockchain then records ownership, transfers between owners, compliance conditions with built-in legal and investor rules, and final settlement. This matters because traditional asset markets are slow, layered, and expensive. It also changes three major things. Liquidity. Assets that were previously difficult to sell can now be divided into fractional pieces and traded more easily. Accessibility. Smaller investors gain exposure to assets once reserved for institutions. Transparency. Ownership history becomes traceable on-chain. Fine art may be one of the most symbolic test cases of all. Now, let's talk about the headline. In late 2024, Premier Art Holdings Ltd partnered with Chintai Nexus to launch a $50 million tokenized fine art fund. The fund focused on investment-grade works, the kind typically sold at major auction houses and acquired by ultra-high net worth collectors. Chintai Nexus provided the blockchain infrastructure. This was not a typical crypto launch. It was designed to attract serious capital, not speculative traders. Ownership was fractionalized into digital tokens. The art was professionally curated and managed. Investors purchased tokens, representing exposure to the portfolio. The platform emphasized regulated tokenization, including investor verification, compliance controls, legal structuring, and institutional-grade asset custody. At launch, access was limited to accredited investors. That's important. Tokenization does not eliminate securities law. Even if ownership is digitized, the underlying asset remains subject to financial regulation. This is not yet retail democratization. It is institutional-grade tokenization infrastructure entering the art market. But it is a structural shift. For the first time, a fine art portfolio was designed for blockchain representation from day one. This isn't random. Three forces are converging. Traditional finance is exploring tokenization as the next infrastructure layer. Major banks are piloting tokenized bonds, private credit, and settlement systems. The question is no longer if, but how efficiently assets can move on-chain. Blockchain technology has matured beyond early NFT chaos. Platforms are now focused on compliance, custody, identity verification, and structured asset backing. The conversation has shifted from speculation to infrastructure. At the same time, investors are searching for yield and diversification. Fine art has historically been viewed as a store of value and portfolio diversifier, particularly during inflationary cycles. Tokenization offers a new wrapper for an old asset class. When traditional capital begins operating on blockchain rails, the shift becomes structural, not experimental. But there is also a cultural question. Fine art has always been elite. Access to high-value works required massive capital, insider networks, and auction house relationships. Tokenization challenges that model, but it does not erase it overnight. Ownership is no longer strictly all or nothing. Instead of one billionaire owning a masterpiece, thousands of token holders could theoretically share in its financial exposure and in the appreciation these works have historically experienced over time. But this changes psychology. When a painting becomes fractionalized, it shifts from being purely a cultural artifact to being partially a financial instrument. If masterpieces begin carrying live market valuations, does that enhance transparency, or does it reduce art to a ticker symbol? Does broader exposure democratize culture, or accelerate the financialization of something once considered sacred? That tension is not resolved. This is not the first attempt at fractionalizing art. Platforms like Masterworks have allowed investors to buy shares in paintings for years. There was also a tokenization case involving Signum Bank and a Picasso. But those structures relied on traditional securities frameworks layered onto digital access. What makes this newer model different is that it was purpose-built for token issuance, integrates blockchain infrastructure from inception, and aligns with broader RWA momentum across finance. It is part of a larger migration of traditional assets onto blockchain rails. Art just happens to be one of the most symbolic test cases. The tokenization of fine art is not just about paintings. It reflects a broader transformation in how value is structured and transferred. Across markets, traditionally illiquid assets are being converted into programmable financial instruments. When infrastructure changes, behavior follows. If assets can move digitally, settle instantly, and integrate into global liquidity pools, markets become more interconnected. They also become more financialized. We may be witnessing the early stages of a system where nearly every asset, tangible or intangible, has a digital representation, and that changes the psychology of ownership itself. The $50 million Tokenized Fine Art Fund by Premier Art Holdings Ltd and Chintai Nexus is not the end of art elitism. It is the beginning of structural experimentation. Will this simply create a more efficient marketplace for the same elite participants? Or will tokenization eventually expand meaningful access to everyday investors? That answer depends on regulation, adoption, and how infrastructure evolves. Fine art is entering the same technological transformation, reshaping the rest of finance. The ownership model is being redesigned, and the exclusive access once restricted by velvet ropes is starting to change. If this helped you better understand where art and finance are heading, don't forget to like and subscribe. And if there's an asset class you're watching, move on-chain, real estate, bonds, commodities, drop it in the comments. We'd love to explore that next.